All right, good people. Welcome to another episode of Stock Market News Today, where I'm going to pose a question. So how many stocks are in your portfolio? You have 10, 20, 30 even. Now, it's my opinion that if you have more than 10, you have too many. And the reason why I say that is at the time of this recording, the market is currently experiencing a pullback. And if you got that many stocks in your portfolio, something's got to be weighing your portfolio down. Another reason why I say that is if you got more than 10 in your overall portfolio, that's a lot more work that you have to do. And what I mean by that is you have to manage that portfolio. Now, in my opinion, if you're going to have that many stocks in your portfolio, my opinion is you do better buying an ETF. For those of you who do not know what an ETF is, that's an exchange traded fund. Break it down a little bit more. That it's a fund that has a basket of stocks in it already. So why would you have more than 10 stocks in your portfolio and not have an ETF? And besides, an ETF would be a whole lot cheaper than trying to buy 20 and 30 stocks into your portfolio. Some people that I've spoken to personally has said that they bought those stocks on impulse, like they didn't even do any research, they just randomly bought it, and that's really a terrible idea in my opinion. And on that one, there's a saying that I heard by Warren Buffett that says, if you're not willing to hold a stock for 5 years, don't hold it for 5 minutes either. Now, I go one a little further than that. Now, I say this, and it's only my opinion, for I am not a financial advisor. This is just my opinion. If you're not willing to buy 100 shares of a given stock, you're doing yourself a disservice. Now, not to say that you should buy them all at one time, for I do understand that people have other things going on in their life. They have other financial obligations and all that. But at least contribute funds to your brokerage with the intention of working your way to 100 shares. We're going to check out a quick clip of Chief Financial Analyst Joseph Hogue, and we'll listen to his take on those of you that have more than like 10 stocks in your portfolio.
Well, investing in more than 20 stocks is like trying to stuff an entire double quarter pounder with cheese in your mouth all at once. All you get is your third heart attack and the creeping sense that things are getting a little out of control. And that is exactly what Wall Street wants. Because, nation, investing has become an entertainment industry. Investing is no longer about making you money. It's about keeping you entertained. Everyone from TV to online, even right here on YouTube, they make their money on ad dollars, which means they need you addicted to stock picking. Like that junkie in need of a fix.
Now back to why I believe that having so many stocks in your portfolio is a bit much also, because if you don't have 100 shares of stock, then you are unable to sell what's called a covered call, thus maxing out your portfolio. Or I should say, getting the best bang for the buck. So I'm going to show you an example of selling a covered call while the market is still open. So as you see here, I have 100 shares of SPY, and this gives me the ability to sell contracts against my shares. Currently, I paid, no, this is what they're actually going for. Now, this is my average cost, $554.66. And you can see what they're currently going for. So I'm ahead pretty good so far. See the difference? My average cost, what they're going for today. Now that's, as you see, about almost $30. Now that might not sound like much, but you times that times 100, and that's almost 3 bands. So you see here, this is the contract that I'm currently selling to the market for $590. So I'm hoping you're getting the idea of why it is my opinion that if you don't have 100 shares of a given stock, you're doing yourself a disservice. Now you see right here, this average credit of $1.16, that's times 100, so that's $116 of credit that was given to me because I'm selling my shares to the market. Now, the time of this recording is January 10th, 2025. You can see right there that I just sold this contract to the market today at the time of this recording. This contract will expire Tuesday, January 14th of 2025. Currently, that contract is now going for $58. This is my today's return, and this is the total return. I just did this today. So here's a couple of things that can happen, or it can play out a few ways. One is SPY actually goes to $590. If it does, then I would get the difference of $554, I believe it is, and $590. So that's almost $4,000 plus the $116 in premium. That's one way it can go. Another way it can go is by Tuesday, January 14th, SPY does not go to $590. That's okay. I'll just gladly take the $116 and I get to do it another time. Now, can this go against me? Yeah, it can. The way it can go against me is if I want to keep SPY, and honestly, that is my sentiment, is to keep it. If it goes past $590, then the premium will go up, and it'll go up past the credit that I got, which was the $116. Now, if I really want to keep it, then I'd either have to roll the contract out another week in time, or buy the contract back for a loss, but I'd still have my shares. So what a rollout actually is, that's when you sell your current contract and buy another one further out in time. Now, for the most part, most contracts expire on a Friday. This one expires on a Tuesday. That's because this is an ETF. But all in all, not bad. $116. All I did was push some buttons from the comfort of my home, and I get to keep doing this, and I don't have to wait a week. Well, with this particular ETF anyway. Now I'm going to show you another one. This is Palantir, the ticker's PLTR. And currently it's going for $66.99. Now this one is an example of how it can go against you. See, now you see my average cost, $70.90. I got 100 shares of it. So on this one, I sold a $70 call. Now, yes, I paid a little bit more than that for it, but at the time that I did this, Palantir was dropping, so I said, well, let me protect myself and get most of my money back. Hence, that's why I sold a 70. See here, this is my average credit, 89 cents, but times 100, $89. I got a credit of $89, but the contract's going for $1.19, or times 100, $119. So currently I'm down, and I'm down because Palantir is going back up. Now, it may not sound like a good thing for, in this scenario, but it actually is good because I wanted to keep Palantir anyway. Now on this, I'm going to either have to buy the contract back for a loss, and I'm okay with that because I do want to keep the shares, or it might not go to $70 and the premium drops below what it's going for currently. Or I can go out in time and buy a contract further out. I hope that didn't confuse you. Oh yeah, by the way, this contract expires the 17th, I believe. Let me check. Yeah, January 17th. So I have a week to figure out what I'm going to do with this. But at any expense, I plan on keeping Palantir because I've done my due diligence, as you should when you're investing in the market or anything for that matter. Now I'll show you one final example of why it's pertinent to me anyway to have 100 shares of a stock. Now, if you have the means to buy 100 shares of a stock, you can actually get a discount. Now check this out. Here I'm selling to the market 200 shares of the ticker FUBO. Show you how this plays out. That's currently what the two contracts are going for, 8 cents or times 100, $8. And since I have two, it's 16. Now, this is a $5 put. This is what's called a cash secure put, by the way. Oh, and by the way, these two contracts expired today at the time of this recording, which is January 10th. So now to break this down, this $5 put this means that I offered the market $1,000 to pay for 200 shares of FUBO, because 5 times 100 is 500. Now, when I executed this trade, this company was going for $6, maybe a little bit more. But that said, I got an average credit of 31. That's times 100. That's $31. And I have two contracts, so 62. Currently, it's not at $5 yet. But that's okay. If it does go to $5, then I bought it for the cheap. This is my return for the day. And this is the total. And now here's another part to this. If I end up owning the shares, which I might because it's very close. Now, I didn't really pay $1,000 for it because you had to subtract the 62 from it. So I got a little extra discount. Or right now, if I chose to, I could just buy these contracts back for $16 and walk away from it. But I also did my due diligence, as you should too. And I want the shares actually, so I'm gonna let it play out. So this contract expires today. I'm gonna let it play out, and we'll see where this goes. So excuse me I'd like to just take a moment of silence for those in Cali. Okay, gonna get back to this. So, what did you think? Did you learn something? Do you see why I say that it's advantageous for you to have 100 shares of a stock in your portfolio, where you at least now consider it, maybe start adding funds to your portfolio, and over time, when you're in a position to buy 100 shares of whatever equity you decide to buy, do so. Now, one thing now, not all stocks can you even sell options to the market, because they don't all trade options. But that's something you're gonna have to figure out. But before you invest in any of them, they'll pretty much you'll be able to somewhere see if they do trade options or not. But anyway, it's been very advantageous to me anyway. Now, one last note: I am not a financial advisor. Do your own due diligence, for I cannot tell you what to buy, hold, or sell. If you see a picture of me that's trying to sell you crypto, it's not me. I won't do that. This video, or pretty much all my videos, are catered to the beginning investor. And in my opinion, crypto's a more advanced portion of the stock market. And again, if you see that, it's not me. And pretty much the only way I will DM you is if you commented on any of my videos or you asking me a question. Other than that, I will not initiate a DM. And this may also be helpful. If someone offers you anything in private, meaning like they DM'd you something, suggest that they do a live so that we all can see it if it's worth it. And if that person is really trying to do business or prosper, they should not have a problem with that. Or ask them to do a Zoom meeting with you and watch how they answer. Now, I know this video was kind of long, and I appreciate those of you that stayed to the end. I hope it was helpful. You learned something. And if you liked the video, please like, share, comment, and all that good stuff. Till next one, love you all. Peace.